Welcome back to the nationally syndicated Price of Business show. I'm your host, Kevin Price, talking to you about you and your business. Chris Kidd, he is a regular here on the Price of Business. One of my personal favorites, a friend as well as someone whom I really respect and love to work with when it comes to all things money. In fact, we call him the money guy, the money man here on the Price of Business show. And he's part of our very elite team that includes several Nobel Prize winners, New York Times best-selling authors, several billionaires, as well as C-level executives for Fortune 500 companies that are regulars, some of whom are regulars on the program, and he is part of that team. Always love having you on the show. Chris, real quickly, your website is chriskidd, KIDD.com. Kind of tell us all you do for humankind.
Well, I'm a financial coach, and I got a really good description of it just the other day. So basically, I'm like a personal trainer for your money. Some people, they go to the gym and get a trainer because they're overweight. They need to get back in shape. They need to lose weight and trim the fat off. That's like getting out of debt and getting your finances in order and cleaning up the mess. Then you got other guys that are in there and they're training and competing, and the big swole guys that you see that are getting ready for a show. Well, that's some of them may use steroids, some of them may not, but I'm the guy that helps put your finances on steroids and pump you up to make sure that they're the money's getting the biggest impact and growing as much as possible, and showing people some tricks and tips that most people don't know about, and not just about the growth side, but the protection side as well. So that's kind of what I do in a nutshell.
There you go. Using SNL as an example, you are the Hans and Franz of money. We're going to pump you up. There you go. I want to pump you up. Yeah, there you go. Okay, so a lot of people are not pumped up right now, as you well know, with all the things going on with the Fed. They did it again, raising interest rates, which is now no longer a surprise. And, and they're using words like pain to describe what's happening and will continue to happen. And I use this analogy. I like your analogy. I use this analogy to talk about how the Fed deals with, things like inflation. And essentially what they do is they treat it kind of like a medical doctor would treat cancer. They see inflation as a cancer, and they use really essentially a poison pill like chemotherapy, which is not delivered as a pill, but you know what I mean, to treat that cancer called inflation. And the impact is, anytime we've had to get to this point, just look at the 1980s, the last time we had it on a significant scale, it always leads to recession. So we're now at the point of recession by design.
Yeah. And it's one of those things that it's going to be painful. I mean, this medicine nobody wants to take, and everybody's complaining. All the investment guys on TV and everything are complaining that, hey, the Fed's going too fast. They need to stop this and that. And we know what they're doing. I mean, they're trying to. We're technically, we're in a recession, and you have people arguing back and forth over whether we are or not. That doesn't matter. They're trying to force one, and Powell has said, like the Fed chairman, he said he wants to get the employment down. Like, we're trying to make it to where less people have jobs than have jobs right now. They're trying to get that employment down. They're trying to get prices down, and the way that they're doing it is with jacking up interest rates, and that's slowing everything. I mean, even the affordable home prices has changed quite a bit just in the last 6-8 months. I'm trying to think of when they started this, but I guess about 6 months. The 30-year note or a 30-year mortgage is now over 7%. Last year, you could get one, you could lock in a rate at 2%. Now it is 7, even up, 7.5 is what I saw yesterday. It's crazy. So it's making it way
and not to make people more depressed. Not to make people more depressed, but I'm a little older than you, as you know, which should make me depressed. But no. Anyway, but back in the '80s, I started looking at these things for the first time while I was in college, and we were going through that recession. And you know how much interest rates were back then for buying a home? They were double digit.
Oh God, yeah.
Double digit interest rates.
Yeah.
And the Fed has no problem going there to cool the inflation. It has no problem going there. And so it's very chilling. And so what I thought of, and we chatted about this before the show, what are the questions people should be asking right now?
Well, number one, the first question that people should be asking is, am I prepared? Because stuff has already gotten ugly, but it's going to get uglier, I believe. Do you have savings? Is there some kind of a cushion that you have to help you be prepared during this time? And I've been one. I mean, there's been a lot of people saying this for the last multiple years, and I've been one of them. Is cash is trash because of inflation. You're losing money if you had money sitting in the bank. Well, now that's changed. So, I saw the other day you could get like 4% on treasuries. I think that was what it was. And before you're getting nothing. So people they're actually being able to be paid a little bit more to have their money parked, which I'm not a big fan of just having money sitting there. I want my money to work, and I don't keep it very long in one place. But, right now you should have savings and to have some sort of a cushion to, if there's an emergency, can I last 3, 4, 5, 6 months without losing everything?
Give a minimum number of months of savings, an emergency fund, contingency fund, and a premium or not. I won't say maximum because wouldn't it be wonderful if you had millions and millions you were sitting on? But realistically, how many months on the extreme end should you be preparing for reasonably, and what's the minimum?
I'd like to say as a minimum like 3 months, and that's really a low end on what a lot of people recommend. But 3 to 6 months. I think more than 6 months is almost overdoing it, because just the way that I think and the stuff that I teach people, it doesn't make sense to have too much money saved up to where I want my money working for me. When I get money, right, I have a place for it to go. But it is a good idea to have, I would say, a good 3 to 6 months of just reserves sitting there just in case, because of some of this stuff. And then also there's going to be deals coming up, so have some money set aside.
Yeah, even while you're parking it in a place that you can conveniently get it out.
Yes, you want it liquid because you don't want to park it somewhere. That's why I'm not a big fan of like parking money in CDs. Like if somebody came to me right now and said, okay, you can put your money in the CD for 4 or 5% for a couple of years, I don't want to park it for that long. I might park it for a month, 2, 3 months, but I'm not going to park my money for a couple of years at this point. You want to try to get something out of it, but have some money that you can get access to rather quickly.
Yeah. Okay. Number 2 question. What do you got for us?
It kind of feeds in, that last part kind of feeds into this, but am I in a position to capitalize on opportunity? Because there's going to be opportunities, and there's already some coming up. Right now, I definitely don't think that we're done. Everybody's been asking me about, when they should come back into the stock market and stuff. Is it time to start reinvesting? And the market's dropped so much since, the highs and everything. And, oh, wow, that's a great opportunity. Well, yeah, but I think it's going to even be a better opportunity if you wait a little longer. So if you get in a position. If you're not in a position to capitalize, try to get in a position to capitalize, because the time when really big wealth is made is in times like this, when, like the old saying, when there's blood in the streets, that's the time to buy. I always say buy fear and sell the frenzy. So when people were going nuts, we saw the frenzy over the last year or so, especially like with crypto and stuff. Everybody was going nuts, and everybody was becoming an overnight millionaire with it. And I still think that that's a way of the future where there's going to be a lot of money made, but it's kind of like the dot-com bubble. If you had a .com on your name, during that frenzy, you were, your stock's going up. But then, a big bomb went off, and a lot of those guys went away. So some of that stuff's going to be gone. So you got to be real careful and do your homework on that stuff, and don't only pick one. I mean, you got to diversify in that situation and listen to some, find some experts to listen to on that stuff. But
and be mindful of the fact that be mindful of the fact that the vast majority of those are junk. There's only a handful that are really worth considering when it comes to the crypto space. And I agree with you. You should really do your homework. Really appreciate the question itself, because, the reality is that people make money in every type of economy. Every type of economy. And you are echoing maybe the greatest investor of all time, certainly of the last 100 years, Warren Buffett, who says, you know what, when people are scared, that's your time to, I don't like the language, take advantage of. You ought to take advantage of that fear, because it's really, guys like Warren Buffett look at these prices crashing, and he doesn't lose any money on stuff he owns unless he sells. Meanwhile, a bunch of stuff he wanted to buy all of a sudden gets available at a lower price.
Yes, and that's a key thing that's one of the things that I teach, is be able to evaluate whether something is a good price or whether it is going down because it's trash and it's not going to go back up. But be able to evaluate it, because if you have a good company, and one of my things here with this is, have a 10 to 20 year plan. So if what you're looking for now, you're not looking to make money in the next 6 to 12 months. I mean, if you do, great, but look at anything that you should be buying now between the next 6 to 12 months or so. You should look at that as, where's this going in the next 10 years or possibly 20 years. But I would at least have, a 10-year time horizon that I'm looking at for stuff to buy right now, because this isn't the time to. You can trade markets like this. That's stuff that I've done. I'm not going to tell anybody go out and start doing it unless they really know what they're doing, but or learn what they're doing. But the time to be trading back and forth, you can make money, but if you don't know what you're doing, it's best to buy with a longer term horizon, because you've got more room for error and you have more time to be right. About
to play beat the clock with you, and so why don't you wrap it up with a couple of more questions, just a couple brief answers, or point people in the right direction, and your final thoughts.
Well, yeah, my last point I'd make is, or the last question that I would say for people to ask is, what do I need to learn? So, okay, if I'm not in a situation where I can take advantage of stuff, what do I need to do? So what do I need to learn to fix my current situation? If if I've got a mess going on, I've got to clean this stuff up and get out of it. I'm getting emails and messages about stuff like this every day. Hey, my credit's messed up. What do I do? I'm scared because of what's going on economically, and my finances are not very strong. I don't have anything. I don't have the savings saved up to weather this. What do I do? Well, what do you need to learn? How do I make sure I'm in a position to take advantage of it next time? What are the things that I need to learn to get ready for that? And then how do I come out of this, stronger and kind of level up during this situation? How do I come out of this period that we're in and going into, and come out of it in a better way, so that I know how to manage my finances, and I'm stronger and in a position to do something better afterwards.
Yep, and you and I have talked about it often. You are either a victim in life or an owner, and this is really an important time to make sure you're on the owner side and not the victim side, and don't set yourself up for victimhood. All right, always love having Chris Kidd on the show. Chris Kidd, that's ChrisKidd.com. Regular on the show, he is our money guy. Thanks so much for being with us. I'm Kevin Price. This is The Price of Business.